Hey everyone, if you've been keeping an eye on the stock market, you know things have been pretty wild since February 2025. The market's dealing with some major shifts, and today we're breaking it all down. What's happening with interest rates? How are big tech companies holding up? And what's Warren Buffett doing with his billions? Stick around and let's dive in. What's up with the Federal Reserve? The Fed has decided to hold off on more interest rate cuts in 2025, and that's making waves in the market. Some investors are worried as fewer rate cuts mean higher borrowing costs for businesses, which could hit profits. Both the bond and stock markets are reacting, and we're seeing some real tension. But don't panic just yet. Smart investors know how to adapt. Big tech earnings winners and losers. Some major tech giants didn't quite meet Wall Street's expectations. But guess what? Investors are still backing the tech sector in a big way. Take Alphabet, for example, Google's parent company. Saw a 7.3% stock drop after their earnings report. Sounds bad, right? But tech-heavy ETFs are still pulling in cash, showing that long-term faith in innovation is strong. People aren't giving up on tech just because of a rough quarter. Trade Wars 2.0? Here we go again. President Trump just signed an executive order slapping a 25% tariff on imports from Canada and Mexico, plus an extra 10% on Chinese goods. This is huge because it could mean higher production costs for U.S. companies and rising prices for consumers. On top of that, Canada, Mexico, and China are already talking about hitting back with their own tariffs. Translation, more uncertainty in the global trade scene, which could shake up the market in unexpected ways. Warren Buffett's game plan. Let's talk about the Oracle of Omaha, Warren Buffett. His firm Berkshire Hathaway has been making some serious moves. They recently sold off nearly half of their Apple stock, bringing their holdings down to 400 million shares. Why? Well, that sale boosted their cash reserves to a record-breaking $276.94 billion. That's a lot of dry powder for future investments, meaning Buffett is likely waiting for the right moment to strike. But where is he looking next? Buffett has been eyeing Amazon, luxury powerhouse LVMH, and home retail giant Williams-Sonoma. These aren't just random picks. Amazon dominates e-commerce and cloud computing. LVMH owns the luxury market, and Williams-Sonoma has a solid niche in home goods. In other words, he's diversifying while sticking to companies with major competitive advantages. One more thing, AI is playing a huge role in Buffett's portfolio. Nearly a third of Berkshire Hathaway's holdings are in AI-driven companies like Apple, Amazon, and even Domino's Pizza. Yes, Domino's. They use AI to analyze customer orders and start making pizzas before they're even placed. Amazon, of course, is leading the way with AI-powered recommendations, shopping assistants, and warehouse robots. Buffett sees AI as a game changer, and clearly he's betting big on it. Conclusion. So what's the takeaway? Even with market volatility, there are major opportunities in AI, cloud computing, and healthcare. The smartest investors aren't running for the exits. They're recalibrating their strategies to make the most of these trends. If you found this breakdown helpful, hit that like button and subscribe for more market insights. Got thoughts on where the market's headed next? Drop a comment below and let's discuss.